Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, February 26, 2007, and the S&P 500 closed with a loss of 11 cents today here on the Spiders. Take a look at that intraday time frame. We can see that on Friday I said that it looked like the 5-day moving average started to turn lower in here, and that's reason for a little bit of concern and reason for us to become more defensive in here. We did get a gap higher this morning, but when you have that 5-day moving average declining like that, oftentimes they do fail, and it did today. It came down, initially tried to find a little support in this area where it has been finding some support near that 145.40 area, but then it didn't fail. It moved lower. We were looking for a support level down near 145. It broke down through that short term, but then came back up, and now it's really in a position where it could go either way. Although looking just objectively here, we do have these lower highs. We've made a higher high in here, but then a lower low. So the picture in the S&P 500 in the short term is definitely mixed. If we throw those Fibonacci's on here, just from this recent low on the 12th of February to the high on the 22nd, you can see that it came down right to the 50% retracement level. A 61.8% would bring us down just below 144.50. It's not a market call, just an observation that might be an area it heads down to over the next day or two, especially since we have the potential for some gap support in there as well. Overall, though, for the S&P 500, I'd say you have to be neutral at best in the short term, but longer-term trend is still definitely higher in here. The Nasdaq 100, these guys sold off with about a 0.5% loss. Is finding some resistance up in this area where we had previous resistance. Not nearly enough trading in this area and a breakdown to call it a double top, though. So it's not a double top. Don't look at it as that yet. It's just an area where it's finding some resistance for now. Whether it turns into an important top or not is anyone's guess, but there is clearly some resistance at 45.50 that we have to be concerned about. We're looking for potential for support down near $45 a share today, and that's about where the market bounced from, and we closed just above that level, so I didn't draw that too well. But here's $45 level that I thought we could maybe get down towards. And probably this is the better area anyways, where we had this prior resistance right here at the 44.80. So it's looking like the market maybe did what it's supposed to do. And now maybe we're going to suck some shorts in here. The primary trend is clearly still higher. We've got that 10, 20, and 50-day moving average all advancing. So maybe if we can recover back up above this level 45.10 or so tomorrow and stay above that level, this will have qualified to bring in some new short sellers looking for the end of the world that hopefully can get squeezed past the 45.50. But just getting back into this range doesn't really change anything other than make it back to range-bound short-term within a primary uptrend that looks like it has the potential to continue higher. The MidCaps, MDY, these guys lost 33 cents. Clearly no damage done to the uptrend in here. This is just a real powerful uptrend. We did see on the very short term, though, that this level were 157.50. That's what we were looking for as support. We broke down through it and recovered. So all these markets are kind of in an area where they leave a lot of short-term doubt. And that means it's just time to go real slow in here till we get a little bit more evidence. And I think, another day, probably 2 days, ought to give us more reason to find some conviction either way in the market. Semiconductors, as we said, they were right up against this level of prior resistance. And what I'm hoping for is that we can see a pullback down towards the $35 level. I said this scenario on Friday that potentially we could see a pullback down towards that $35 level, bring some short sellers in here, and then squeeze them higher as the weekly chart is starting to look a lot more bullish. We've got the 50-day moving average above the 100, which is above the 150, which is above the 200, and they're all advancing too. So that makes things a lot more bullish looking on the longer-term picture for the semiconductors. Not quite bullish yet, but definitely in a position where they could easily turn very bullish and catch those short sellers off guard. We got involved in SiRF Technologies at 31.15 2 days ago. Had a real nice run up. You should have sold half of it up near the price target, which I think was 33. But in the remaining balance, I'd suggested a stop of 32.50. And this is a perfect example of why we trade. Look at how this thing completely failed, and should be out of it now with a very healthy profit in shares of SiRF. Garmin, GRMN, we were looking to buy this stock today above 57.70, not up at 58.10 though, where the stock opened. So it opened much too high to warrant a low risk trade. So no trade should have been taken in there. ONT, we were looking for a move above $1.28. Obviously that didn't occur, so you shouldn't have taken a position in there either. Brooks Automation, symbol BRKS, we were looking for a move above 1620. However, it gapped way up to 1660, so don't chase these gaps. There's no reason to. They just, end up becoming a big source of frustration most of the time. So no trade should have been taken there. Lufkin, we did get involved in. We were looking for a rally up to at least 56.50. We got that gap early on, and then it looked like it was going to fail nicely. It broke down below 56.15, which was where we were looking to sell the stock short, and unfortunately, it rallied back up to our stop level, which was 56.50. So you should have taken a loss in here of 40 cents. Our stop was actually 56.55. So stopped out there for 40-cent loss, which on a, which that 0.75% on a $56 stock.